Hello and welcome to this presentation. My name is Simone. I'm an accountant and a financial analyst, and today I will explain the journal entry. I would remember that the material related to this presentation, along with other materials for accountancy, are inside my website vatradi.com. So today, in relation to the journal entry, I give you the definition, I explain how many types of journal entry you can find, and I'm going through a practical example. So I start with the definition. What is a journal entry? A journal entry is a record of a business transaction inside the accounting system. So every day, a company has many business transactions that an accountant needs to translate into numbers inside the accounting software by recording journal entry. When you record a journal entry, you need to remember that you need to insert the date of the business transaction. For example, if your company purchases a material, you receive an invoice, which is a legal document. You use the date of the invoice to prepare your journal entry. You insert the amount to be credited and debited, a brief description, the accounts, and the system is giving you a unique number for every journal that you record. What is important to remember is that debits and credits are the two sides of every journal entry. Every journal entry is prepared based on the double entry accounting principle that requires at least one debit and one credit, and when the total debits must be the same as the total credit. The debit side increases asset and expense accounts. Instead, the credit side increases a liability, revenue, and equity accounts. I also know that for junior staff or for students can be difficult to correctly allocate the amounts in debit or in credits. In relation to this, I prepare a table that I believe can be useful for you, for your job or for your study, and I will explain when I'm going through my practical example. In the meantime, I will explain how many types of journal entry you can find. We can have simple entries, adjusting entries, compound entries, recurring entries, reversing entries, closing entries, correcting entries. So these are the most common journal entries that you can find. And I will explain 3 of these. So I start with the simple entry. A simple journal entry records a transaction that affects only 2 accounts, one debit and one credit. When one account increases, the other decreases by the same amount. So the simple journal entry is the easiest journal that you can have when there is one GL code in debit and one GL code in credit. Instead, when we are speaking about the compound journal entry, a compound journal entry records a transaction that affects more than 2 accounts. It includes multiple debits, multiple credits, or both. So in a compound journal entries, you can have more GL code on the debit side, more GL code on the credit side. However, you need to remember every time what is the general rule. Debit must equal credit. Doesn't matter how many GL codes you insert. And when I explain my example, I insert one simple entry and one compound entry. In relation to the closing journal entry, a closing journal entry transfers balances from temporary accounts to permanent accounts at the end of the accounting period. The closing entries are part of the year-end activities, which is an important job for an accountant. And in relation to this, I'm working to prepare a specific videos. So please subscribe and you will be notified when the video will be available. What I'm doing now, I'm going inside Excel and I will show you the example that I prepared for this presentation. So I'm inside Excel and this is the example for today. So Vatradi sells product A to company B for 1,000 euro. Vatradi receive 80 euro by cash and it agree a payment term of 30 days for the remaining. So this is the example. I'm Vatradi, I sell a product to company B for 1,000 euro. Company B is giving me cash immediately for 80 euro and it agreed to give me the remaining after 30 days. In this example, I not insert any taxes to make the example easy for this presentation. So, from the reading, I understand that I need 3 GL code. One for the income, one for the cash, and one to record the payment terms. So now, in order to do this, I'm going inside my chart of accounts looking for the GL codes. So this is the chart of accounts that I prepared for the previous videos, where I explain what is a chart of accounts and how is structured a chart of accounts. So I leave you the link of the 2 videos at the end of this presentation and below also in the description. So now I need to find my GL code. So I have cash that is in front of me and I use accounts receivable. What is accounts receivable? Accounts receivable is a common GL code that you use to record every money that you not receive immediately when you sell a product. Now I need a GL code for the income. From the previous video, I explained that the GL code that start with 1 are asset, 2 liabilities, 3 capital, 4 income, 5 cost. So my section is number 4 and I have my GL code, product A. So this is the table that I use and that I suggest that everyone that is not comfortable when is recording a journal can use. So beside your chart of account, you put plus and minus for every GL code. Based on the double entry accounting system, every time that you increase your asset, you put the amount in debit. Every time that you reduce, you put the amount in credit. This is the opposite for the liabilities, where the amount is increased on the credit and reduced on the debit. The same for the capital, the same for the income. Instead, for the cost is the opposite. So, in this moment, I need to increase my income, so I put the amount on the right side. After this, I need to increase my cash and also my account receivable, which are going into the debit side. So now that I understand, I'm ready to prepare my journal. So in this situation, I have the date of the transaction, I have my GL code, I have a briefly description, and I have the amount. So I have the income in credit, I have the account receivable in debit, and I have the cash in debit. So now what's happened that after 30 days, the client is paying me the money. So I'm going inside my bank statement and I notice that I received the money. So I need to do a simple entry. So this is a compound entry. This is a simple entry where I record the money in. So I have bank in debit, account receivable in credit. As you can notice, account receivable has completed its job because it was in debit at the beginning, in credit after. And based on the 2 journal, I have the income in credit and I have cash and bank in debit. Total 1,000. So this is the example that I prepared for this presentation, and I hope that I support your understanding of the journal entry. If you have any comment or if you have any question, please leave below. Thank you very much for this presentation, and we see you to the next video.